Hey guys, it's November 23rd. Happy Thanksgiving from Florida. And it is 1:04 in the afternoon. So we only have a little bit more time before the FOMC meeting minutes come out. And while everybody should know what's in those minutes, because the point is it's just the minutes of what happened that was then discussed ad nauseum at the press conference. For whatever reason, it has a tendency to throw the market actually one way or the other. Now, the Grula trading folks, as well as, David, who always joins me on this call, we've been very, it really feels like the market wants to do a Santa Claus rally. And the fact is, we do have some massively undervalued names, and you've got a lot of the volatility, the real concerns and questions out of the market at this point relative to last year. So it's going to be really interesting in the back month. We do have some data points, but then you've got these binary sort of situations that could happen. Today, I'm going to go through the economic data that came out very strangely this morning. And then I'm going to go through two names that really, they're so binary in certain ways, but one way or the other, the pop that they will do, if it goes one way or the other, is so significant that you almost just want to have them as lottery tickets in your portfolio. Let's go into it. And that's Activision and Credit Suisse. So let's get into it today. I'll set up the markets first so you can see kind of like what has been the temperature of today. Past performance is not indicative of future returns. I was going to Yahoo Finance because they do have the major market indices. Here you can see it in the middle. You've got the S&P. It was up, now it's down. This tells you that we're just the day before the holidays, so it's not really making any kind of meaningful, thoughtful movement today. NASDAQ, again, been up and down. Russell, up and down. This is like just repositioning, day trading, stuff like that. This isn't real movement. Crude oil, oddly enough, because the inventory numbers keep coming out so strangely, is actually down. Oil inventories, weak. Crude oil inventories, better than expected. I don't know if people realize that you have to take one and refine it into the other. So it's a strange reaction to have it down 3.51 almost 4%, almost 5%, right? So we'll just kind of see. Like I said, we're still in that shoulder period. December is really the end of December. So you might maybe the first or second week, but if it gets cold anywhere, there's population density, you're going to see some things that are rather interesting. Okay. Let's actually take a look at how the map is going out from Finviz. You can see energy getting sold off. All of these companies, by the way, are hugely profitable, even in the $70 range. So I wouldn't even worry about that. Most of them have a collar on, which allows them a capped, kind of a capped situation on what could happen with oil, at least for the next 3 to 6 months into winter. So there's that. And then we have Tesla getting a little bit of love today. It's so massively undervalued even at these levels, but we shall see how it plays out, because I think it's just going to be very volatile until the numbers start to come out again. Okay, now let's get into the economic data that went underway today. As you can see, there were a lot of economic data points, and traditionally these are not the data points that drive the market. Durable goods is done by the US Census Bureau. They do like kind of a cross section, and then S&P PMI does a bunch of a cross section. And right now, depending on what cross section you take, you can get a really different picture. Durable goods, however, will include durable goods that are really used for the consumer as well. And we know the consumer's been a little bit strong. I was actually quite surprised at what we saw. They don't do a ton of breakout on durable goods, but the bulk of it really was machinery. So I wish they did like a line by line item on exactly what durable goods orders was, but they don't. So that is what it is. Now I want to talk to you about new home sales. So here's the number anyways, you can see it, 1%. The expectation was about half that by the street, if you really can consider an expectation numbers, but it just tells you kind of what we've been saying. This is all new orders. And I've told you, like, new orders, most of the companies, they're not seeing the weakness, even though they've kind of slowed it down on production. And that is going to be very interesting, setting us up into 2023. We don't know yet is really what the thing is, but could be very, very awkward for a lot of next year if things resolve and become more peaceful versus escalate and become more volatile, if you will. All right, let's look at new home sales. New home sales came in at 632 versus 570. That's way higher than expected, but I really wouldn't be excited about this number or read too much into it at this particular juncture, other than to think, wow, there could be some problems, possibly, just not in large cap home builders, because large cap home builders already told you what they're going to do. Their strategy is we're going to sell through the housing inventory we have and then no moss. So this actually is not the majors, Pulte, DR, Lennar. This is going to be everybody else. Okay. And I really want you to do, when you look at these numbers, you got to go through. I can't talk enough about the fact that if you don't, if you just use the headline numbers right this minute in economic data, you will not get the picture that you need to get. And that is because there is so much that is important in the different line items. And if you miss it, you really take the wrong conclusion. So when you look at the new home sales numbers, they also provide this house is sold, under construction. It's sold, but we're not going to do construction. We haven't broken ground yet. And then they provide you a number where it says, these are under construction, but the contractor is taking the hit on this because it hasn't been sold yet. So now I'm going to show you what that looked like in October, because in September we had a weak number and now October we had a strong number, but I think it's a muted strong number because of what I'm seeing on how the sales are going. Now, this should make perfect sense to folks that are in the southern states, where like Florida, et cetera, where we really have a lot of folks that are dependent on this. So this to me is reporting not just how we want to think about the markets, et cetera, but also how you want to think about your own home renovations, your own home sales, because that is a big asset for folks. So let's take a look at it here in October. This is October 2021. So this is the number we're comparing against. So we had less houses sold this year in October versus last year. And then you can see, though, that we had more houses completed, et cetera. So the sales number is we sold it, it was already built. It also is we sold it, house hasn't been started yet. We sold it, the house is under construction, okay? Pre-sales. But then if you look at this number over here, these are for sale at the end of the period. So this means that this number went higher, okay? So there's more houses for sale. And so this is made up for in the new home market. We're not talking about the used home market at this point, okay? And then of the houses where people got their permits, there's more that haven't even started it, just a little bit more. This is in thousands, by the way, for the entire nation, okay? And then this is under construction. So we've got more houses that haven't been sold under construction. So this is not an unambiguously positive number, is what I'm saying. We're going to have to see what happens as we get into the winter months. That probably will show, you've got some weather that'll happen in there, but we really are looking for this for sale at end of period, not been sold yet number to dip down for us to truly feel good about the housing numbers. And I just wanted you guys to see that, because I do know that given how big this difference is, 632 versus 570, and the market rally this morning, this is probably going to be misreported. That's all I'm saying, as per usual. Now, I want to talk to you about Activision. Okay, just a little bit of setup for folks that haven't been playing along. Microsoft did an all-cash offer for Activision at $95. And then this thing traded right up and then traded right down. Now, you need to understand too about Activision. This is all stuff that you can look up, but hopefully this will help you out. With Activision, the reason Microsoft offered $95, which was a real discount relative to the other gaming companies, was because the CEO, oh man, did he have some issues as far as related to the ladies in his organization, how they were treated and how they were going to be having any kind of career at that firm versus really anything. Now, this is a problem throughout tech, but this was particularly bad, even by any standards. Look, I worked in finance for a long time. I read what happened and I was like, wow, that's next level right there. Okay, so it was really bad. Microsoft made the offer. If it hadn't been that Microsoft made the offer, Activision would have had a flood of people out the door. They did still continue to have some people, but largely speaking, we all know, or at least I have said since the very beginning and have had confirmed by people within technology, that the purchase isn't just for the Activision assets, the gaming assets, but also for that beautiful headcount. They've got a lot of really talented people there. It is very hard to get that talent level. even in a market right now where we've got job layoffs. Now let's look at what is the situation right this minute as to why I'm bringing it to your attention for 2023 for you guys to start to really look at it. Now, I've had options farther back and I've continued to move them farther back, and I'll tell you why. But first, just so you know, right this minute, Activision at its current valuation isn't expensive relative to the competitors. These are the other two large cap competitors. As you can see, Activision is square in between Electronic Arts, which did have some big acquisitions, and Take-Two. Okay, it's square in between at 18 times. It's, if you do forward PE, it's cheap, but you can't really. That's a weird metric right this minute, just because it's in the middle of acquisition. And then on price to sales, kind of in between EV to EBITDA. It's a funky metric again right this minute because of the acquisition, but that is what it is. So it's not massively overvalued. My preference would be you buy the stock, but I'm going to go ahead and do the options piece as well for folks that are like wanting a little bit more leverage and swing on this. So right here, if the deal goes through, wonderful. If the deal breaks, they're gonna have to figure out their leadership situation. So you do get a bit of a dip at 76. So that has to be kind of weighed in with it. Thus far, it's not like Microsoft has done nothing but demonstrate very clearly it's trying to close the deal. Now, here is Activision for those of you, take it a little slower in there. Here's Activision for those of you that are not familiar with this company at all. It's these games that y'all know and love, Call of Duty, World of Warcraft. They bought Blizzard, and so they own Candy Crush and all the corresponding stuff that you play on your cell phone that you know when you're waiting at the doctor's office, and so on and so forth. It was about 10,000 employees, 400 million users worldwide. That's what they're buying. Remember, Microsoft does own Xbox, and both companies have announced that they're getting rid of any kind of box going forward so that the business model will look more like an Activision business model, which is extremely profitable when they put games out, et cetera. So at $95 a share, this is what they were doing. This was the deal. And originally, they had said it was expected to close in the first quarter of fiscal 2023. That's why the options look the way they do. But now they're really talking about a June. This was a recent article from November the 7th. They're talking about it on track to close in June. Now, right now, the stock is at a 25% discount to the closing price of the deal at $95. And what would happen is if you own the stock, just like with Twitter, when the deal closes and everything gets transacted, you're going to get you're just going to have money in your account where stock used to be, and that thing will trade straight up the minute it closes, very close to deal price, and that is what it is. Okay, so that's just about some outstanding regulatory approvals that still need to happen. Now, if you do the options, you can see that the June options are trading at a number that tells you that they're still saying, we don't know about June. So you do get a double. So you can kind of just look 90, 95. The spread between these is $5. Do the math between the two, you got 170. So it's going to give you like a little bit like 40%. It goes if 40%, it doesn't. That timing is wrong. 60% that, it's going to give you 60% that timing is wrong, 40%, what have you. That's what's going on there with the options. Usually, that's really rough math, by the way. It's the roughest math ever. There is a much more calculated, extreme way to do it, but the options is giving you a sense for what people think the timing is, plus or minus any kind of concern that the deal is not going to go through. But at this point, both parties still seem really excited to have it complete. So that is what it is. It will be very binary if you do the options. That's why I prefer you do the stock if you're new to any kind of this, because here at these levels, it might go down a little bit. You can take a look at the chart. You can see how far it's gone down, but you want to keep this on your radar screen because, if Twitter went through, this probably has a higher problem. You would have originally thought this had a higher probability, but you never know what's going on in this marketplace. So I just want to bring that to your attention. You can just buy one share to play along. It's not going to go to zero as far as that goes. I think, somewhere in the high 60s, I think where it drops to, and at 76, it's not the biggest fall. So Credit Suisse, we had some news flow today. Oh, I didn't bring it back. They're doing an offering. Okay. So you guys know that I have several videos on Credit Suisse, and today they're out in the marketplace raising more money. And you guys can look at that article. They have about 20 investment banks that are going to participate. If that wasn't trying to hedge it out so that no one had to take the risk, I don't know what is. it's a really unique way to do it, because it does mean that they're paying the entire street to help them find the other side of their trade. But it'll shore up some more capital. They were already at a 13% CET capital ratio, so it wasn't like they were in any kind of risk, except you always have to be careful, because if you are losing assets on the asset manager to the tune of like a 4 billion at a quarter, then you will actually have your valuation look a certain way, such that when somebody goes to do the math on what you need to reserve and risk, it's going to look a very particular way. So I think that's why he's doing it, if I had to guess. And it is a guess, so I'm not going to pretend like I know, but we're trying to report this as soon as it's interesting. I just want to remind you guys, here's the if you are looking at the article, you can just do one for one on the Swiss franc, or you can multiply this to get this in US dollars, so that you can more easy, or euro, so you can more easily do thought process around it. But the asset management business actually is not impaired to the extent that they can retain these assets. Awesome. The challenge is high net worth people don't like banks that have issues. So it's not a nothing. And that's why I say, and you could go back and see my episode on Credit Suisse. If he pulls it through, he is a champ, like high five, CEO of the year. And this is just one more part of the story. So I want to share it with you, that the asset management business, it's still a really good business, but nonetheless, our assets are people in asset management. I want to show you this. This is from the last quarter as well. You can see the Swiss bank, asset management, wealth management, these two pieces, they're all making money. So this is pre-tax income. It's really about the investment bank and shoring that up and making sure there's enough capital. If he can get it through, it's a great move to the extent that it's enough to cover the CET capital requirement. I don't know that he necessarily has too many more losses at this point. It's always hard to tell. I mean, he did lose 640 million, but realize that some of that is a type of loss that is more cosmetic in nature than actual, because these guys do have a fairly developed, let's call it, structured product business. And sometimes those marks can also be kind of nasty depending on what the sensitivity is to interest rates. But in a lot of cases, it just ends up netting out that it's a mark and not an actual change in asset value and what it can cash flow you. So with that, I'll go ahead and hit the pause and keep this a little bit short, because really the minutes are the minutes, and that's what we care about today. Hey, Dave, what's going on?
Hey, man, back to Activision. Is there a chance Microsoft is trying to renegotiate price?
I don't think so. I mean, this is more, there was a holdup in the UK on regulation. In general, when this deal was announced, there wasn't any kind of concern in the US as far as I go with the FTC and the other, I always forget, it's two commissions that have to approve it. So there's not any kind of trust issue given the nature of the gaming market. So it's still a global company.
Right. Well, I mean, if they did not disclose the problems with the CEO before.
Yeah, that's not a problem. That's already been resolved as far as that goes. I mean, a lot of that news flow stuff came out in about a month and a half into the deal. You never know. For sure, you never know. And I do think that there was a group that tried to sue a particular way, because he does get a payout instead of his just desserts. And I agree with the ladies on this one. This was pretty horrendous if you look at the stories.
Okay, he was CEO of Activision. Okay. Well, I mean, if I'm Microsoft, a billion's a billion. If they can save a little bit, they'll try to, I think. Because the gaming industry has gone down.
Yeah, it's it's always hard to say. I don't think so, because usually when the deal's done, and there wouldn't, like, the only thing that could possibly be in there is stuff that's already known. So it's only if the commission asks them to punt some division in order to finish it off. That does happen from time to time, but this is not, because this isn't some kind of core. I mean, the gaming business isn't like, it would be random that they were asked to sell off some piece of Activision before they could close it in order to avoid antitrust or any kind of like weird other regulatory thing.
Got it. Got it. Okay. New home sales. So, I mean, to me, that's very, very, because interest rates are 7%. Are you saying these are not really built homes? These are like pre-orders?
So yeah, you've got a combination. So what comes out in that number that some people forget because it's new home sales, right? Rates are high.
Right.
You've got new home sales. In the new home sales number, you do have those that are under construction. So you sold the house, but it's still under construction, right? So you
Right.
do get all of that. That side of it, fair and square, looked pretty good. Those numbers were coming down relative to last year, which is what you'd expect. The new home sales hasn't been sold yet, from the permits, et cetera, or the new homes, that number is still looking weird. So these are the for sale homes number. New homes for sale. I'm saying it in such a strange way. Let me start again. So the new home sales number, that looked good, but the new homes for sale number, which also comes in and out of that release, that didn't look as great to me.
So that would be inventory.
There you go. Yeah, exactly. And we know that from all of the other home builders that reported last month that they were just hoping to run down their inventory. So my suspicion is this is your smaller builders, but your smaller builders always are the ones that ruin it during any kind of, like 2008, the big builders were more or less fine. There was a couple of big builders that ate it hard, but they more than learned their lesson. So they started decreasing certain, like, they started going into, concern mode as early as last year, as the beginning of this year, January, et cetera. And even before that, they were having a certain set of conversations with investors about what would constitute hitting the brakes. So this is probably your smaller retailer, smaller new home builder.
They're building homes in Texas and Mexico with a 3D printer. Right now, it takes 3 people to build it, but eventually it'll take 1 person. These are $400,000 homes. That's pretty big. That's pretty expensive in Texas, right? Can you imagine?
Yeah, I mean, medium home sales are now coming in. So they had an average selling price that's right around there. And then they said the average home price sale was actually higher than that. The median home price was around exactly where you just named, around 450 or something like that. So in general, home prices have gone up tremendously.
Well, right. I'm talking about if you can build a house with a 3D printer versus all the labor you can save. So I don't know. To me, that's good for builders.
Oh yeah. And on top of it, it's not, I mean, all these new innovations for the future are fantastic. But I think too, you've definitely had some alleviation in lumber prices, and then steel prices have actually improved dramatically as well in the last few quarters. And remember, these things were not sold with, they were sold with some thought process to how much the lumber and steel prices and PVC prices. Well, those have actually come down as well a bit. But it wasn't like, I mean, housing price, like the actual raw material cost has gone down a lot, helping a lot of these builders. And we saw that in the last quarter when they reported their earnings, which is why, like, if we start to get any kind of tapering again, if we get any quantitative easing and we get any kind of like wiggle on this inflation situation, the home builders, the large cap home builders, I can't speak for all the home builders, they have kept their balance sheet pristine. So, you just want to keep them on your radar screen.
Got it. Okay. Thank you so much.
Just one other thing on the large cap builders in particular, and then even some of the smaller ones, if folks are just doing research, because it is this time of year where you start to like dig in and see what are people doing, how do I want to set up for 2023. To the extent that they have really clean balance sheets and they didn't do anything stupid last year as far as overbuilding or taking permits out that, or buying land in the dumbest possible way, with all due respect. I'm from Florida, so we're big real estate people down here, but provided they're actually in good shape, because of how things have played out, we still do have a housing shortage going on. We got a housing shortage and auto shortage. It could spit out on a dime. You know what I mean?
Right. And rates need to be, this is too high for rates. So
it's a little bit too high. I mean, this is actually, I remember this is higher than where I bought the first time in 2000 or something. I think I bought right out of college, 2000, 2001 or something like that. And this is higher than my rate then. So it's kind of something.
In Florida or New York City?
I bought in Chicago. That's where I graduated.
Oh, Chicago, right. North side, not south side.
No, I bought in I want to say it was
Evanston.
like Lincoln Park area, just
Oh,
south
it's
of,
lovely.
yeah,
It's lovely.
Gold Coast, just north of Gold Coast, just south of Lincoln Park is where I ended up with my very first apartment.
Okay, good deal. Happy Thanksgiving.
All right, happy Thanksgiving, everybody. See you guys Friday for a very short day. Bye.